right. Well, the market open is with us, and so let's just quickly take stock of what the start is looking like. It's red, but how much red? 22,600 something is what the opening ticks look like. 661. So this is not bad. 90 points down. The support comes in at 22,600. That's the 40 hourly exponential average. We're down about 80 points. Nifty Bank is down about 1/3%. 165 points down. 48,815. Mid-cap index is down about 1/4, and I think we've got the small-cap index, which also is mildly in the red. But all about stocks, as always, Sonia has got all the rates. Sonia.
Well, thanks a lot for that. So you started by saying that the Nifty is under pressure, and that's, you can see it here, 80 points lower now. Just hanging on to that 22,650 mark. But let's take it to individual stocks. We have TCS's numbers later this evening, so let's see how the stock is doing right now. It's down about 0.5% because we are expecting some margin pressure on the business, and overall as well, it's expected to be a lackluster quarter for the entire IT sector. Barely 1.5% growth is what we're looking at in constant currency terms. So the stock is down about 0.5%. Sun Pharma, we were expecting some pressure there because the US FDA has conducted inspections at the company's Dadra plant. The stock is now under a lot of pressure, down 2.5%. So keep an eye out there. Metropolis is also in focus. The Q4 revenue growth has come in at 10%. The core business revenue growth is quite strong, actually. That's a big move on Metropolis, 6% higher now on that stock. Core business revenue growth of 15% is what we've seen. Vodafone Idea is down about 1%. There's the 18,000 crore FPO that will open on the 18th of April and close on the 22nd. BEL and Cummins are in focus. Macquarie put out a note where they said that BEL and Cummins are their most preferred industrial picks. So I'm looking at both those stocks well in the green right now. Volumes are also picking up over there. Credit Access Grameen is another one that I'm looking at this morning. Goldman Sachs has initiated buy. They have a target of 1,788 on the stock. The stock is seeing a big move right now, but still below the target price that Goldman Sachs has. So maybe some more headroom over there. A lot of these consumption names continue to hit new highs, whether it's Interglobe Aviation, whether it's Zomato. You had United Spirits that was at a fresh high on Wednesday as well. So just keep an eye out on some of these names consolidating around their all-time highs or 52-week highs rather, but some traction in many of these names. Phoenix Mills is another one I'm looking at this morning. Total consumption went up 27% for Phoenix Mills in Q4 at 2,818 crores. So that stock is up almost about 3%. And then finally, Tata Motors is in focus as well. It has been holding well above the 1,000 rupee mark. So very, very strong for Tata Motors. This morning, there is news that the electric vehicle arm is in a pact with Shell for charging stations. And this is important because, it sort of alleviates concerns about range anxiety. And that's one of the reasons why adoption of EVs is not picking up. So if there are more charging stations, then, of course, EV sales will go up. And hence, Tata Motors is up almost about 1%. But back to you guys, it's not a bad opening at all. The Nifty is actually getting back to closer to the 22,700 mark.
Well, that's right, Sonia. A few stocks that are moving around, though, on rather large volumes. You have CAMS. That one's up close to around 4-5%, I think, the last time I checked. So that one had a good opening. Ramco Systems, the stock had a very good day on Wednesday on the back of that multi-dollar deal that they had signed with Korean Air. Today as well, Ramco Systems, one of the top volume gainers. After, I think, the 15-20% gain that we saw on Wednesday, the stock is up another 5%. Reliance Infra, the stock was down 20% after the Supreme Court reversed their 8,000 crore award to DMRC. Today as well, it's opened up gap down. I think there are pending sellers out there, so keep an eye out on that one. That stock is under pressure. Vodafone Idea, you have details on the FPO that's flashing for you on the screen. The floor price is fixed at around 10 rupees odd. So that's the reason why, in fact, the stock has opened up a little bit low. So that FPO pricing has come. That's a fresh piece of news out there. Interglobe, I'll keep an eye out on that stock, particularly towards the end of trade. The weight in the MSCI is set to increase today. And approximately, $55 million worth of inflows are expected. So towards the end of trade, you should keep an eye out on that stock. Though there are a couple of downgrades that are coming there. From Axis Capital as well, there was a downgrade. And I think from Investec, that was the other one that I was looking at. So that stock is, a little under the weather, but it could bounce back later in the trading session. A few more notable movers in the early morning trade. You have Ashiana Housing. The stock is up close to around 8%. It's coming as one of the top winners today. So just highlighting that stock. And I think that's par for the course in terms of the top movers at the start of trade. Metropolis, look at that big move out there. Hindustan Copper continues to buck the trend, 4.5% higher. Prashant.
Absolutely, and that's the second largest volume-led gainer right now on the in the market. So that's a big one, right? 374 or so is where that is. Bharat Electronics, I think, is my colleagues highlighted 2.25%, 2.33% higher. That's the biggest volume-led gainer. Irida is coming up with a 2.5% pop. Again, large volumes. Metropolis 6%. CAMS is up 5%. CAMS is at 3,200. So that's looking very good. So Idea may be a little down in that FPO, but Indus Tower, which I think saw, not a downgrade, but there was a call, I think, on Wednesday, which said that, well, it's kind of priced to perfection now after the rally, etc. Indus Tower is starting up another, I think, 2% or so, 1.5%. CDSL is up 2% as well. So some of these capital market plays are looking good. HEG is up about 2.33%. HEG was a mover on Wednesday, the last trading session as well. Thanla Solutions saw a very large move on Wednesday. It went from $900 to almost 1,000 rupees in a single session. That is Wednesday. Ramco Systems was another big mover. So some of these are just pure momentum moves, right? So Ramco, for example, from 300 on Wednesday, it went to 340. So that was a large, near 10% move. It's starting up once again. Maharashtra Seamless is starting 7% higher. Look at the volumes there, which will come up. Sona Comstar is up about 4.33% there. Sula is up 3%. Sula saw a very decent session last Wednesday. Phoenix Limited, Castrol. Castrol was up 7 or 8% on Wednesday. And I think, 225 coming through there. Crystal, we had the facilities management company in the morning, 4% reacting to earnings. Lal Path Labs, I can go on. And by the way, the list of volume-led gainers is pretty long. I mean, right out of the gate, it's not lacking for volumes one bit. So looking very, very good on that particular front. Reliance Infrastructure is down another 20%. So there was that arbitral award, which went against it. I mean, essentially the court said, well, a court ruled against them. It was down 20 on Wednesday. It's down another 20. So there are some exits taking place there. And look at the volumes for this point in the day, which are looking good as well. Policy Bazaar, which went up on Tuesday and Wednesday, is seeing a bit of a pullback. So this is, just the start. On the downside as well, action is picking up, although market breadth is positive. Tahir Badshaw is with us, CIO, Invesco Mutual Fund. Tahir, good morning. Good to have you with us here. Thanks very much for your time. And I should start by congratulating you and your team on the transaction. We'll of course have you in the new avatar in that sense. But Tahir, how are the markets looking? It's been pretty solid. Although at the margin, some of the earnings preview notes that one is getting is pointing to earnings growth for the fourth quarter, maybe base or whatever, slowing down a little bit as compared to the 9-month FY24 numbers. Q4 perhaps will see a bit of a slowdown. So from an earnings picture, is all well, or you think there is a bit of a slowdown in works?
I think so far so good. Obviously there will be a deceleration in 4Q FY24 compared to what we've seen in the 9 months, as you rightly pointed out, and that I think was there in the mind of the market in any case, because for the full year the projections were what they were, and that implied a run rate which is going to be slower in the fourth quarter compared to what it was in the first 9 months of the year. So I don't think that will probably unnerve the markets as much. But of course we need to kind of we are getting into the result season now, starting today, and we will probably start focusing more on that, and that will be an important deliverable. I mean, market will try to look for at least reaffirmation of earnings trends and continuation of that in FY25 as we go along, particularly from some of the key sectors which have supported the earnings over the last some time.
Tahir, hi, good morning. Are you worried about some sort of a major correction in the market? I'm asking because there are some internals that are suggesting that, whether it's the way the US 10-year yield is shooting up, whether it's the way crude prices have gone up, gold is moving up a lot, largely because of, geopolitical tensions that we're seeing between China and the US. Do you think all of that is leading to a phase where risky assets could see a lot of pressure in the second half of the calendar year?
Well, I don't know about a lot of pressure, but I think there should be some pressure. There's quite a possibility because some of the macros have now started to once again unravel, and market will try to kind of once again get into that debate a little more aggressively with regard to whether it is interest rates or the geopolitical scenario and even our own political election-related outcomes, etc. So we're getting into the thick of that. But I think we are also at the same time in the next couple of months going to be in the thick of the result season as well, and I think that will probably dominate um, the longer term or the medium term picture of the market. So I think at least as managers, we would probably be looking a little more at that. Interest rate related debates, I think, will continue up until the time we probably see the possibility of probably no interest rate hikes starting to kind of affect demand and maybe even starting to have some toll on earnings. I think the market will probably remain quite confident. There will be interruptions, punctuations, etc. along the way, driven by some of the macro indicators. But I think the larger and the more stronger focus will probably remain on how the earnings trajectory manifests itself.
Okay, all right. Hi, Tahir. Good morning and good to see you. And since you briefly mentioned elections, I want to ask you, how do you approach some of these capital goods companies? Getting into elections, that could be a bit of a lull in terms of activity, ordering activity, and even work on ground. How do you approach them? BHEL, the stock has been a big gainer. I'm looking at their past quarter's operational performance, is still delivering negative margins. Your view on some of these names, and how do you approach the capital goods theme? Because it's got plenty of a runway ahead, but in the near term, things could be a little bit jittery.
Quite possible. I mean, I think once again, that too is in the budget of the market, in the sense that, people on the street, there have been expectations that there will be a slowdown as far as, or at least a deceleration in the momentum of new order flows, and probably some execution related delays as well as we get into the thick of the elections. So I think that again is somewhere there in the mind of the market. We'll have to see as to what does it do to the shorter term earnings growth over the next 1 or 2 quarters, or the top line growth, more importantly. But I think as you at the same time, we will have to balance it out, and we know that the longer term or the medium term picture at least is still pretty okay. Policy is still in the right direction, and probably we can take heart in that. There are some pockets of some of these industrials which have got elevated in terms of valuation. So you basically just do a little bit of weight management in your portfolio, and basically try to wait for better entry opportunities or price points. I think that's how we are probably dealing with this space. It's probably we don't really have much to suggest, much to go by the fact that we need to take a dramatically different view compared to what we have been taking for the last some time on some of these sectors.
Okay. We are heading into elections. We're heading into a full-blown budget in the month of July. There is earnings season as well. What do you think will be the biggest trigger for the market from here on to ensure that, this market uptrend continues? What are you watching out for closely?
So I think a couple of things which will probably, be relevant for all of us. One is, we will also be looking at how the monsoon season is likely to fare as we get into the next 1 or 2 months. Initial indications, while quite decent, but we will have to probably see as to what that looks like over the next 2 months. I think the important thing also will be, like as I said, earnings delivery, and markets will look forward to some of those important stalwart segments like industrials, autos, oil and gas related companies, which are supposed to deliver strong earnings. Do they continue to deliver on that promise? I think there will be also expectations around some part of the rural recovery and probably the policy direction of the government, of the new government, with regard to the weaker sections of the economy, particularly on the rural side. So I think these are some of the things which are not necessarily triggers, but they are things that we need to watch out for over and above the macro backdrop related matters that we all know about.
Tahir, as inflows continue to be steady, right? I mean, you got the latest numbers for them. Sorry.
Yep.
Go on.
Sorry.
Because for the first time in many months, there is a bit of a shift from small caps, right? Which seems to have happened.
Yes.
Is that very pronounced, and what does it mean for how you manage, or rather not just you, but I mean, if this continues, how some of these funds are managed?
No, I think we all know that in the last couple of months there has been a fair bit of chatter around it, and there have been certain regulatory headwinds as well, which have probably seems to have borne on the flows in the last month as the data shows. But we still can't call it out as a trend, and I think we still at least from a portfolio management perspective, we do keep getting ideas at regular intervals. Some of them seem to be reasonable. Some of them are good in terms of business models, but probably not very attractively priced. So we can follow a wait and watch approach. I think it's a nice thing that if we are probably going to see some moderation in flows, it will allow us a little more time as managers and investors to be able to take a little more, take a step back and probably try and evaluate them at our kind of prices that we would like, or our kind of valuations that we would probably want to give them. So it's not necessarily a bad thing in seeing some moderation of flows for a few months.
Okay, all right. Just hold your thought, Tahir. I just want to point out a couple of stocks. Reliance Infra, the one that got that unfavorable verdict coming in on Wednesday. The stock was down with plenty of sell orders. It appears some part of that has been absorbed. So it was down 20% apiece. It's come off the lower circuit. So keep an eye out on that one. And Reliance Power is the other one as well. That's come off the lower circuit. So both those two stocks, just want to highlight the price volume moves on both of them. Tahir, later this evening, the big Q is going to be IT. And some on the street believe that this is going to be the phase where the earnings will bottom out. The disappointments start getting priced in and things start looking up. Though in the second half of this year, we have the US elections that will take center stage. How would you approach them and what's your preference? Some say that, well, the larger ones have a better balance sheet. I'd rather go with them. But the other contra view is that the mid caps, they have a faster, pace of growth that could come up for them. And you rather go with growth companies. Your approach?
I think we are basically trying to use a barbell here, and we are operating at both ends of the spectrum that you mentioned. And there are a few companies that we need to back from a growth orientation perspective, and some of our growth oriented strategies are reliant on some of those names, particularly in the mid cap space as far as IT is concerned. And then there are value opportunities, perhaps a little more in the large cap IT names compared to the mid caps. And for some of our value strategies, we don't have a choice but to kind of look at some of those a little more, and especially if we can live with some of the softness that we are likely to see in the next quarter or so. But if we believe that during the course of FY25, the base will start becoming a little more attractive for them, things can start falling into place. We can probably use the valuation support to be able to kind of buy into some of those names as well. But overall, at an aggregate level, I think it looks like from most assessments that IT budgets are likely to be flat for calendar year 24, and it would therefore imply reprioritization. It will therefore imply some parts of the IT services segment doing better than the others, because within a flat budget you will try and reallocate to some of the more important activities. So I think then that will essentially drill down into different companies in terms of who are going to be bigger beneficiaries compared to some others. So I think that's how we are trying to make our differentiation. So to answer your question, I think we are operating at both ends of that bubble.
All right, we'll leave it at that. Tahir, thanks a lot for joining in. Appreciate your time here on CNBC-TV18. By the way, the stock of the moment is Entero Health. So just pull up that. Of course, our colleagues were telling us earlier about how Jefferies has initiated coverage on Entero Health. They have a target price of 1,510 on this stock. And the stock Entero Health is, I think, now up almost about 15%. If we can just pull it up for you on the screen. They say that it's a very fast-growing healthcare products distribution business. But if you remember, Entero Health had a pretty weak listing, and the company has been loss-making for the last 3 years and is sitting on wafer-thin margins. So, the stock has not had a great run. But today, Entero Health is having a big move this morning. There's a, on the back of that Jefferies note. So, interesting moves coming in over there. But let's move on and let's shift focus to PNB Housing Finance. The ratings have been upgraded, remember, to AA+ from AA by CARE Ratings with a stable outlook from positive. To discuss this and more on the FY25 outlook, we have Girish Kosgi, the MD and CEO of PNB Housing Finance, joining us. Girish, always good speaking to you. Haven't spoken in a while, so thanks for joining in. We want to talk a little bit about this rating upgrade. How does this impact your cost of funds? What is the incremental cost of funds now versus, what the average cost of funds are? If you can just take us through how this would impact your business.
Good morning, Sonia. I think this rating upgrade was long due, and now 3 out of 4 agencies have upgraded from AA to AA+. I think rating upgrade is a reflection of lot of improvement on financial metrics in last 4 to 6 quarters. Just to give you a context, PNB Housing is in a transformational stage, and this is in 2 phases. Phase 1, obviously, we had to deal with stabilizing corporate book, improving asset quality, get back growth and capital raise, and also be future ready in terms of opening branch network so that we are ready for the current financial year onwards to scale up in terms of growth and profitability. So this rating upgrade will definitely help us to reduce the cost of funds, and it will help us to position the company better going forward.
Okay. When you say transformational growth lined up for PNB Housing, can you just quantify that for us? Because, if you look at your performance, right, your disbursements are not translating into any meaningful AUM growth for the business. So can you tell us, when you talk about transformational growth, what are you looking at in terms of AUM growth? What is the opportunity for PNB Housing?
I cannot talk much about Q4 and the financial year FY24 because we are in silent period. But if you have to look at the growth, which used to be about, let's say, a year back, it was almost on retail especially, it used to be flattish, and now we are talking about double-digit growth. And generally, if you see, Q4 is a very strong quarter for NBFCs and HFCs, and I'm sure the industry is going to do well. Most of the companies in Q4 will do well. So in terms of PNB Housing, as I mentioned, we raised capital. Retail growth was pretty healthy. At the same time, we also moved segments. And now we have also opened 100 branches in last 4 months, that is from December to March. So now we have 300 branches. Out of 300 branches, 100 branches are going to start operation from this financial year, which will propel us to growth and profitably, because the branch additions have been largely on affordable. So now affordable branch count is about 160, which was about 100 4 months back. Now it is 160. We have started a new vertical called as emerging markets that also will take shape from April of this year. And of course, the balance 90 branches would focus on prime. So out of 300, 160 would be in affordable, 50 branches would focus on emerging, and the balance 90 branches would focus on prime. So this would definitely help us in terms of growing faster.
All right, Mr. Kowalski, good morning and good to see you. And Nigel, on this side, with regard to the rating upgrade, you're sounding quite enthused. I'm looking at a Motilal report, and they are indicating that the cost of funds could come down by around 20 to 25 basis points. Is that more or less in line, ballpark?
I would not want to comment on any reports, but I think because of the rating upgrade, not just rating upgrade, because rating upgrade is result of many financial metrics improving. So we definitely foresee reduction in cost of funds, could be 15-20 bips in the next few quarters.
All right. Got that. So good to get that number. Mr. Kowalski, hi, morning. Prashant here. Let's just talk about your affordable book, sir. We've spoken about this in the past as well. You've told us that, about 20% of your sales comes from builders and high rises. Rest is plot sales, sort of resales, etc. How's it doing, that book? The bulk of the financiers, and I think we've had this chat before as well, and I asked you, on the affordable side, supply seems to be the problem. That is the feedback, because everybody wants to do luxury. On the affordable side, there's not that much. You've managed to grow the book in a very fast-paced way very quickly. Can you tell us, if you're finding enough opportunities, just some qualitative comments, what's happening there?
Yeah, I think for us, affordable business was a great story. We started that business about 15 months back. So in first 10 months, we crossed AUM of 1,000 crores. And by March, I think we have grown very, very well. So I can't share the numbers as I mentioned to you, but I think it's been a great story on the affordable side. And very shortly, I think we will be crossing AUM of 2,000 crores. I think that has been the story. And in next couple of years, we should be a very, very dominant player on the affordable space in the industry.
So it's about, you're doing about 100 crores a month? I mean, that's the run rate?
No, I think we have peaked close to 300 crores per month. Sorry, of course, that's the peak. If you talk about average, it will be about 200 plus.
About 200 crores plus a month. And there are no issues there, right, sir, on that book? I mean, it's all safe and sound.
Yeah, book is very good. However, for us, it's a very, the book has been built in last 15 months. Book is very good. early warning signals are pretty, comfortable and encouraging. But I think given the context of the product per se being mortgage, we don't see any significant risk. Risk will be in line with the industry.
Are you in that segment? Are you growing faster than the industry? I mean, there is some concern from a few analysts that maybe the book is growing too fast, maybe a little out of sync with what the rest of the industry on the affordable side is doing. Would you look at it that way?
So I've mentioned this before. I think scaling up of affordable book comes in three parts. One is how strong the process is, and are we opening enough number of branches to grow, or are we growing from the existing set of branches? So we are investing in branches, we are investing in people, we are investing in process. I think if the growth comes in by these three, investing in branches, investing in people, investing in process, I think the growth rate, compared to the industry is not really way off. And since the book is very small, we started recently. And since we have expanded drastically on the affordable side with respect to branch, people, investment and process, I think this growth is in line with our overall strategy. And we don't see any risk.
Sure. I think the concern stems from the fact that, even compared to your peers, your AUM growth is still in low single digits, right? Even if you slice it quarter by quarter or even annually. What is the outlook on the overall AUM growth? When do you think you could get to double-digit growth? What are we looking at in FY25 particularly? Will it be better than FY24?
I think growth on the retail book is not in single digit, it is in double digit. I think the growth on affordable is much, much higher. I think it's more than 28% quarter on quarter. I think both in terms of disbursement as well as in terms of book. So going forward on the growth side, we would again look at about around 17% on the book.
17% is the overall AUM growth for FY25, is it?
Yeah.
Okay. And on credit costs, what is the outlook for FY25?
FY25 credit cost should be about around 30 bips.
Okay, all right. Mr. Koski, final question from my end. I wanted to ask you about your OPEX to average assets ratio. I think it's currently at around 0.7, 0.8%. Now you're investing in this branch distribution network. You're also talking about investing more in technology. What should this number move up to around 1% or?
OPEX to ATA is about 85 to 90 bips. I think it could peak to about 100 bips and then it will start slowly coming down. So it will be around 95 to 100.
Mr. Koski, apologies, just to press on that point, just to close the loop on that affordable business. There have been no sort of queries or anything from the regulator, right, on the affordable side? I'm just
not at all.
Okay.
Not at all. I just please look at PNB Housing. On the retail side, the GNPA was close to about 5.5% last March, and today we talk about it is about 1.69. If you talk about overall GNPA, it was about 8.12%, and now we are at about 1.71 as of December end. I think there has been a lot of work happening on improving the quality, and the book what we are building also is pristine, and we are in the same market. I think we are in the same industry, same segment, same market, same pricing proposition, and all the metrics are same. It's only because we have opened a lot of branches because we wanted to cover that gap of we can't take 5 years to grow the book to reach a book of about 1,500 crores because we were one of the companies to start this business late. So we need to obviously catch up. It is more a question of prioritization. So if you have to grow at 17%, obviously we would look at how best can I grow the affordable book, followed by the emerging markets book, and then the prime book. So it is a question of balancing book growth and profitability, keeping asset quality in line.
All right, Mr. Koski, we'll leave it there, sir. Thank you very much for patiently answering all those questions, and hope to speak with you soon again as we track the business. And congratulations once again on the latest round of rating upgrades, 3 out of 4, moving up to AA plus compared to AA earlier. PNB Housing up about 1% or so. The market's moved down a little bit. We're down about 72 points, 22,675. Right now. The other one is, Sonia was talking about Entero, right? That's ENTERO. That's up 20% now, by the way. So it left off on Wednesday, the last session at 1,001. It's at 1,200 straight on Entero. So that's a big pop at this point in time. We'll take a quick commercial break here. We shift the focus on the real estate space. Keystone Realtors will be with us to discuss their fourth quarter business update numbers in just a bit from now. And after that, we'll have an interesting chat with the management of Alkem Laboratories. We discuss the recent Buddy unit observations issued by the US FDA. Stay tuned.
Welcome back. Well, the markets have actually slipped a little bit. Now we're down closer around 100 points. The mid-cap index was doing a relative outperformance, but that is given away. Now it's marginally in the red as we speak. And the Nifty Bank, which has been the one in fine form, well, that as well has slipped a little bit. So let's see how this goes. But buy on dips thesis seems to still be intact till lower levels are taken out. For the time being, let's shift focus to Keystone Realtors. It reported a strong quarter 4 business update. To discuss this and more, how the demand trends are shaping up on ground, we're joined by Mr. Baman Rustam Irani, the chairman and MD of the company, who joins us on the show. Hi, Baman. Good morning and good to see you in. Well, give us a sense first in terms of the breakup. Where has sales come from in the past quarter? How much of it was from redevelopment projects? How much from luxury? And how much from mid-housing? If you could briefly break up those numbers.
Thank you, Nigel. I'm very happy to be on your show to express that we've done extremely well. We've done better than the guidance that we had offered for the last year. And we had given a guidance about 4 new projects being launched in the last year. That is to say that 1 project every quarter. We crossed that milestone in the 3rd quarter itself. And in the last quarter, we again launched 2 projects. So we were at 6 projects as of last year. Our sales have come in pretty strongly from our township projects. At the same point of time, the redevelopment projects. To give you an idea on these 2, I would say the township projects amount to about 38 to 40%. And the rest of it comes from the redevelopment projects that we are doing in Mumbai City. I see a strong trend, and I was hearing Mr. Kusagi speak right now with regards to the affordable housing. I am seeing a strong trend again over there. The numbers are continuously rising, but what always takes the shine is the premium and luxury housing that always manages to get the headlines everywhere, and those sales have also been pretty robust.
Bowman, on the morning, Prashant here. On the affordable side, one has been hearing, the supply is lacking. Actually, I was talking to one of the largest funds, and they were saying that we're looking for opportunities in the affordable side because we want to deploy, because that'll be luxury, of course, is growing gangbusters, but on the affordable side, not so much. Do you think, there's hope, there is hope that it'll pick up at some point, but just wanted your thoughts.
So affordable housing will become affordable more with the initiatives of the government. We are looking at more and more, affordable housing moving outside of the city and more in the MMR area. But there's been a very strong trend of homes that are sold on the Mira Road, Virar, Vasai belt. At the same point of time, Thane, which I would just classify as mid-mass, that's a little above affordable housing, has been doing tremendously well. As a matter of fact, we've seen a great growth come from that market. And Kalyan, Dombivli, those areas are again seeing a surge. We are looking at launching a project out there this year. Affordable housing will do better the moment the government puts in certain initiatives in terms of giving A, maybe a lower stamp duty, B, maybe lower charges that are payable for the FSI that one gets for affordable housing. And of course, construction costs continue to be the highest of the cost matrix as far as affordable housing goes, as we rise higher and higher with our building sizes going all the way up to maybe about 100, 120 meters being the norm today. We do see a surge coming up this year because of the demand that has come up, but these affordable housing prices are inching up a little more than what the commercial or what the premium housing prices are growing.
Okay, it's interesting you say that, Boman. Hi, this is Sonia here. You know, a lot of micro markets in the MMR area are picking up now, right? And especially for luxury housing. So I do understand that at Keystone Realtors, you guys are looking at places like Chembur, Sivri, Versova as well. So I want to understand what is the kind of developable area that you're looking to do, say, over the next couple of years in some of these micro markets. And also, if you map the prices, right? For example, in a place like Versova, prices have gone nowhere in the last 5 years. So do you think luxury homes could find buyers in some of these micro markets?
I would say, to start off with your question on Versova, the fact that the prices haven't gone up in the last 5 years is a huge opportunity. That particular part of the city has been very, very, has a great potential to be beautifully developed. We've got the entire coastline out there. We've got a great buzzing commercial developments happening out there. We've got a lot of the young population of the city living out there, and we are very focused on that market. We believe that at the premium housing segment, there are 5 or 6 things that one really needs to keep an eye on. One is the development of infrastructure. 2 is the fact that where the younger population or the higher earning younger population is moving to, what kind of social infrastructure is being created in that area, and what's the original gentry of that particular location. And on all of these counts, I would say the Andheri, especially Versova belt, really excels, and we are very, very strong in that market. As a matter of fact, we will see launches in the future coming up from there. But as I'm restricted to speak only about my published report, I would say only this, that we see our development on the premium housing coming up in that market as well. Prices will continue to rise because of the demand out there, but I'm very happy to state that most of the developers are following or rather taking their premium out of velocity rather than trying to take their premium out of a price rise, and which is very, very good.
The reason I asked
you asked me another question, but I think I slipped on answering that, Sonia. You want to just ask me again? I'm sorry.
Yes. Yeah, actually, I was asking about some of the other hotspots, right? So Chembur, for example, is seeing a real estate explosion right now. It's suddenly become a premium real estate market hotspot. And prices have gone up over there about 15-20%, I think, in the last 5 years. And you guys are also having something coming up in Chembur, I understand. But do you think that there will be an oversupply in some of these places just because of what's happening in the last 1 to 2 years? And what kind of potential do you see here?
So let's go with data. The number of homes that are getting launched are plenty, but still the total available stock, because of the sales happening, are dropping in numbers, especially in MMR that did almost 41% of the total sales as of last year. I'm seeing that there is a stronger demand than there is a supply coming up. Supply also gets restricted because of real estate being a longer cycle. And in terms of when you go and tie up a project, there's almost a 13 to 14 month wait before you're able to launch it. That is, if all goes well. Chembur, which has seen a growth in prices, is more to do with the fact that there's a great amount of infrastructure surge in that market. You're very well connected. It was the original, lower FSI area. Even today, it is controlled by height. There is a height restriction for most of the buildings in that area. Chembur is blessed with a lot of greenery, and there's a huge golf course around which a lot of premium development will take place. But Chembur also has the ability to be developed in the mid-mass and aspirational category. That is to say, homes between, I would say, 1.5 crores and going all the way up to about 5 crores would get sold very, very well in that market because of the connectivity of that particular area. And again, as infrastructure continues to surge and as the city grows in that direction, we see a lot of interest in the Chembur market, but that's not the only market that is growing. Like I mentioned, Thane is doing extremely well. Thane continues to be the largest growing market in the MMR because of the very fact that there's great amount of infrastructure boost out there. You've got the entire metro going through there. There's lots of developments whether it is in hospitality or in healthcare or in education or even just commercial development, which takes place in Navi Mumbai, which is hardly a 20-minute drive from certain parts of Thane, which make it very, very interesting. We are also seeing a very strong surge, and let us not undermine the western suburbs. They've always ruled the roost, and not ours, but some other developers have done extremely well with their new launches, and we've heard about them. Our new launches in those areas also is something that excites us a lot. And we are consistently working because that was our mother market. We were the ones that, we were literally born out of that western belt. Overall, Mumbai and MMR are surging as far as real estate is concerned, and there's a very strong demand. I would say a whole host of reasons which have been, debated time and again are adding to the sheen or the shine of this particular market going forward as well.
Okay, all right. Baman, final question before we let you go. Could you tell us, as a percentage of your sales mix, how much is redevelopment? And where do you see this number headed? I was roaming around in Bandra yesterday since it was a holiday, and I saw a couple of projects coming up on Bandstand. You have taken up, I think, 2 redevelopment projects, if not more, over there. So for the company on the whole, what is the percentage coming in from redevelopment? And where's that number headed?
Nigel, for a very long time, we've seen our coastline not getting developed the way it should. And cities around the world grow on the basis of their, or rather are beautified on the basis of their coastline development. Bandra is blessed with, again, a great coastline, as you're aware, and we've got the Mount Mary area, we've got the entire Bandstand, we've got Carter Road, all of these having tremendous potential for growth. And, at Keystone, we had mentioned earlier also in our guidance that we are very focused on the blue view and the green view. The blue view being the oceans, obviously, and the green view being wherever there are large open gardens or golf courses, etc. This strategy has worked out very well for us. We are, showing a lot of interest in redevelopments in these areas. And redevelopment as a whole would be roughly around, I would say, 45 to 50% of our sales going forward. And Mumbai market, as we all know, needs a huge rejuvenation. There's always a question of oversupply coming up. I don't think that's happening, as I mentioned earlier. If you look at the data that is there from most of the IPCs that's coming up, the absorption is happening faster than the launches that take place. And as I mentioned, real estate is a slightly longer cycle. You have more than 13 to 15 months, which you have to wait after you tie up a project before you can go ahead to launch it, because there are various approvals that are there. Bandra, I see as a very strong market, whether it's east or west. And we've traditionally always had projects in this area. We've upped our PD to go ahead and acquire more in the Bandra East and Bandra West, because this is one market that gives you the entire spectrum, whether it is the mid-mass housing or the premium housing as well.
Boman, we'll leave it there. I mean, anyway, everyone in Bombay, you've got these boards, right? Mumbai is upgrading. So I hope, over the next couple of years, we see that upgraded version and some of the infra projects, etc., improving connectivity. Thank you very much for joining us, Boman. And
see you. Thank you.
It's great to speak with you. Thank you. Thanks very much. Good luck. We're going to pivot from Pharma from real estate to Pharma. Alkem Laboratories is the company that is on our radar. Now, the US FDA, the regulator, has issued a Form 483 along with 10 observations for the company's Baddi facility. The observations range from drug product containers to control procedures. Let's talk about this and more. Mr. Nitin Agarwal is Chief Financial Officer of the company. He's with us now to take some questions. Mr. Agarwal, good morning. Great to have you with us here. Thank you very much for joining us. Prashant this side. Let's just start with the nature of observations for the Baddi facility. So the analyst at Nomura essentially said, and I'm quoting, he said, we think the observations are somewhat concerning and therefore do not rule out the possibility of a official action indicated classification. This is an important unit. It contributes between 1,000 and 1,300 crores to your international sales. So talk to us about the impact as you see it, Mr. Agarwal.
Thank you, Prasad. First of all, thank you for having me on your show. And talk about US FDA. See, US FDA is a part of pharma ecosystem. And as part of the routine exercise, US FDA has conducted inspection at our Baddi manufacturing facility. And we have received 10 observations. Most of them are procedural in nature, and there has been no observation on data integrity. what I want to talk more about is that if you look at our history of US FDA inspection, in last 20 years, we went through 25 US FDA inspection, and we have never received any OAI or warning letter in those 25 inspection. So we strongly believe that quality is one of our core values, and the entire organization is focused on quality. And we'll submit our replies very soon to US FDA, and we don't see any major challenges coming up.
Typically, since you've never had any serious data integrity type of issues, 25 sort of instances of FDA observations in the last 20 years. By the way, I'll just come to you, Mr. Agarwal. Just want to take stock of the Bharti Hexacom listing as a very strong listing, right? 33% higher. Stock's at about, 760 right now. Officials of the company ringing the bell and at the BSE. And the rate is up on your screen. We'll have a quick sort of update on what the company is all about with Rima in just a bit from now. So that's a new entry on the listed universe. That's Bharti Hexacom. All right, so that's a slight diversion, but we have Mr. Agarwal of Alkem is with us. Mr. Agarwal, what's the time typically, in your in the history that you pointed out? How long does it take for resolution?
So generally it takes 3 to 6 months, Prasad. But as we have not communicated anything formally to stock exchange, so I'll not like to comment here also. But if you look at our past, we had few observations in Daman also in 2017, but we were able to resolve everything within 6 months.
Okay. Can you just remind me how much does Buddy contribute when it comes to the US?
To US, it is around one third of our US business, which is around 200, means between 2,500 to 3,000 crores.
Okay, so 2,500 to 3,000 crores comes from the Buddy unit, and you're saying that there's no possibility.
One third of it. Sorry, one third of it.
Okay, one third of it comes from the. Got it. You're saying there's no possibility of an official action indicated status, right? At the moment.
We can't commit anything. It also depends upon how the US FDA authorities will consider our replies, which we will submit soon. But we are confident that there has not been any major issues of data integrity, or most of it are procedural in nature.
Okay. Most of it are procedural, and you're saying you're quite confident there are no data integrity issues that you're facing with respect to this plant. Got it. Can you tell us what are the planned launches and the key filings from this facility to the US?
So generally we file half of our products from Baddi and half of it from Daman. But in next year, if you look at our next year launches, there is nothing major which was planned from Baddi. Most of it was planned from Daman. So, and definitely we are very, confident that we will come out of it next few months. So we don't see any major impact on our new launch delay in terms of delay on our new launches.
Okay. All right. Hi, Nitin. Welcome to the show. This is Nigel on this side. You're sounding very optimistic, and you believe that, this is not too severe, which is good news. So given that these observations have come from the Buddy unit, what can the US sales growth look like? For the last quarter, it was down close to 10%, clocking around 680 crores. So on this sort of a base for FY25, since FY24, you're in a silent period, but on whatever base you deliver in FY24, what kind of a growth can US grow by? Because it contributes close to 20-21% of your total mix.
Nigel, since we are in the silent period now, so from 31st March to say 60 days from 31st March, we are not supposed to comment on any of the future growth perspective and all. But I would like to share what has happened in US in last, till YTD December. So we have seen good volume growth in US. And if you look at the price decline, which was in, say, double digit in US market, for not only for us, but for all the major pharma companies. So the price decline has reduced. So we saw a single digit price decline in say, first 9 months of the year from April to December. And we assume that this will be in the same range, and the price decline will further reduce, may lower down to, say, lower single digit. And we'll continue to grow our volumes in US with our existing portfolio and with few of our new products.
Okay, so you're sounding like the price erosion is slowly moving away and you'll focus on volume. So that should help you in terms of the numbers for FY25. When you join us, post your quarter four numbers, we'll try to get a number out of you.
Definitely,
So we've gone on
definitely.
about the Buddy, part of the business. Let's focus on the other part. There is this report that indicates that the DGGST intelligence, there has been some bit of some reports that Alkem is in a spot. Could you tell us what is the status of that? Do you have any kind of clarification? Because there are reports that talk about tax evasion. Please go ahead, Nitin.
So, there were reports on DGGI, GST, and income tax matters, so I will cover both of them. DGGI, as part of routine process, they have raised some inquiries with us, and we have replied to those queries. And I categorically want to say that there has been no case or no inquiry on bogus billings, and no inquiry has been initiated by DGGI basis the income tax survey which happened in last year. So there has been news in media, but we want to categorically deny that there has been no such cases. There has been inquiry on the input credits, which we have taken in last few years as part of GST input credit exercise. And when we speak to we understand from our various GST consultants that not only us, but many other pharma companies have received such kind of inquiries. So, and we are very, very confident, and based on the advice we have received from, or suggestions we have received from our different consultants and tax experts, we are very confident that we have not done anything wrong, and we have only taken input credits of amounts where we were eligible.
Okay, and no bogus billing as you're clarifying. So thank you for that clarification. Final question before we let you go. Everything else will be in a silent period, but at least you can give us a directional comment on this. You're sitting on a good amount of cash. Are you all on the prowl? Is there any kind of inorganic growth that Alkem is looking at?
So definitely we are open to explore any inorganic opportunities. Like if you look at our growth drivers, we have done very well in acute segment. We have been a late entrant in chronic. So there have been portfolio gaps, and definitely we would like to fill up those gaps if we get a good opportunity, which is value accretive to the shareholders, which is aligned to our next strategic plan, and also which comes at the right price. So definitely we will like to explore opportunities in chronic. As you may have seen that we have issued a notification to stock exchange that we will be entering into medical devices. We have formed a separate legal entity. So we plan to grow organically and inorganically in medical devices industry also. So something which comes up, which is lucrative, definitely we'll explore those kind of opportunities in chronic and medical devices.
Got it. Mr. Agarwal, just one last question. This has the Directorate General of GST Intelligence opened any investigations with regards to, the allegation seems to be that the company was claiming input tax credit on expired medicines and drugs. Is there something happening?
Yes, so we have, as I said, that we have received inquiries from, and we have submitted required information to the department. And as part of the process, they will evaluate whatever we have submitted, and they will come back to us. But as I said, that it's not only us, many other pharma companies have been receiving such kind of inquiries. So it's an industry-wide inquiry which has happened. So, and...
Got that. Mr. Agarwal, we'll leave it there. Thank you very much for joining us. Good speaking with you, and thank you for all of that perspective. So good speaking with you, and hope that we're able to speak with you, frequently. We'll take a quick break here. Manisha comes back with a focus on what's happening in commodity markets. So that's coming up in just a bit from now. Stay with us.
Welcome back to Bazaar Corporate Radar. For now, the market is not bad actually. It's down but not out, you'd have to say. 100 points lower on the Nifty. The mid-cap's actually in the green. So let's see how the rest of the day goes. It could be a binary move. I mean, for now it's down, but there could be a recovery in the second half. You never know. Mitesh Thakkar is joining us now. Mitesh, what are the stocks to look at this hour?
Well, I think, a couple of stocks which are moving out very nicely, and you were highlighting the mid-cap back. I think, look at a stock called Quest Corporation. It's up about 6%, good breakout, gap setup, and also very positive setup. So keep a stop below 600, look for a target of around 650 here to begin with. And then maybe we can eventually look at higher levels. The other one which I like is Persistent, very early signs of reversals here. So we'll keep a tight stop at 39.80, look for targets of 41.
All right, thanks a lot for that. Let's go across to Manisha now to find out what's happening in the commodity markets. Manisha, over to you.
Thank you for that. Well, I'm looking at the gold prices, which have hit all-time highs yet again in the day today. If you look at the global markets, $2,400 an ounce is done now. I mean, we started this year with 2,050. We saw a low of 1,990 as well, and 2,400 is where we stand right now. Even more interesting move coming in from the Indian markets, where prices in India have hit above 72,000 rupees at 10 grams. And not just gold, silver is trading at an all-time highs as well. So 83,000, 84,000 here is done as well. So very, very strong, insane rally is what we are seeing in case of precious metals right now. Very strong gains in platinum and palladium as well in last fortnight or so is what we are witnessing right now. The reasons that you have seen the run-up in gold is, one, weak US dollar. The falling US Treasury yields have been supporting as well. And then the kind of data that we've seen come in from the markets in US, whether it has been about inflation and labor data, have been kind of mixed, and that seems to be supporting prices. In any case, when you talk about inflation, gold is a safe haven for inflation. So whether you look at inflation on the higher side, or if you're looking at rate cuts going forward, both the scenarios are quite supportive and favorite for gold there. We have seen ECB also come out and signal track on rate cuts from as soon as June. That has been supportive. US Fed could be cutting rates from June or September as well. That is something that the markets have already factored in, and that is what we are seeing playing in case of gold. Where is the buying coming in from? Well, the retail is not buying. It is about global central banks, and the speculative buying has been very strong. So when you look at the net longs from money managers, pardon me, and hedge funds, they have been much on the higher side, taking the gold prices where they are right now. I want to take you through a very interesting data on where the gold prices have been in the recent many years there. 1975, I mean, I'm going as back as that. The gold prices were trading at $160 an ounce. We saw that doubling by 1979. Yet again doubling by 1980, and then doubling yet again by 2020. And we are trading at an all-time highs right now at $2,400 an ounce. So that is the kind of trajectory that gold has given you, constantly gaining in all of those decades there. Where are the prices going from here? Well, we already have done $2,400 an ounce. So I've taken all of those views and forecasts off the board right now. $2,500 an ounce is the view now coming in from UBS and JP Morgan. And there are those $3,000 per ounce cues also coming in from Bank of America. That is if we cross above 2,500. David Rosenberg is talking about that as well. And Citi says once 25 is done, 27 is done, then 3,000 perhaps is definitely coming.
All right. Manisha, thanks very much for that. So that's precious metals, gold in focus at new highs. Let's talk about a couple of stocks now. So Darshan is here. He's got details on two names, Credit Access Grameen. I mean, it's the highest quality MFI we have right now. And the other one is Intero, I think, which is up 20% on the back of initiation. So good morning.
Morning, Prashant. So both these stocks are sharply high. So first, I'll talk about GS on Credit Access Grameen. It has initiated coverage with a buy rating, and target is rupees 1,788 per share, which implies upside of nearly 30% from current level. So what does GS say? It says company has demonstrated a good track record through the cycles, and it forecasts a healthy 21% profit CAGR over FY 24-26. And as per GS, key catalysts are: first, it has diversified loan book; second, market share gains; and third, company has competitive edge on industry-leading credit costs and operating efficiency. Next is Jefferies on Entero Health. It has initiated coverage with buy rating, and target is 1,510 per share. The target price implies upside of 25% from the current levels, and stock is currently locked at 20% upper circuit. Jefferies believes it's a fast-growing healthcare products distributor operating in large and fragmented market. Company should see 20% organic revenue CAGR over FY 24-26, and Jefferies estimates 8 times increase in adjusted profit as economies of scale kick in. In addition, company should benefit from industry consolidation as well.
All right, thanks a lot for that. Well, let's slip into a quick break on that note. But on the other side of the break, in our special segment, Quarter Se Quarter Tak, Ekta will join in to tell us what are the expectations from pharma companies in Q4. We'll also be joined by Vishal Manchanda of Systematics Group to discuss that further. Well, let's find out what you can expect this quarter in terms of the pharma sector earnings. Ekta is here to tell us more about that. Ekta.
Well, yes, thanks very much for that. Pharma companies are likely to report around a 12 to 14% healthy year-on-year growth and as much as a 26 to 27% EBITDA growth on a year-on-year basis, led by a steady quarter in the US offsetting a seasonally weak domestic market. The US markets could grow as much as 22% year-on-year, higher than the 4-quarter growth average of around 17 to 18%, aided by easing price pressure and sales of key drugs, especially continued sales from the blockbuster cancer drug Revlimid generic. Company-wise, in the US, Dr. Reddy's could see around a 5% Q-on-Q US growth, which would be led by over $100 million from Revlimid generic and aided by the integration of the main portfolio. Zydus could see an over 20% Q-on-Q US growth led by Revlimid generic again. That could add as much as $50 million for the company, according to some estimates. Cipla sales could be tempered due to loss of market share in the albuterol drug, which is basically a respiratory drug. Sun Pharma could see around a 2% Q-on-Q growth in the US, led by their specialty portfolio of drugs, which has been doing well consistently. And Lupin will benefit from inhaler Spiriva generic, driving around a 4% Q-on-Q growth for the company in the US. Domestic market is likely to grow around 10 to 11%, driven by sales of chronic drugs and a recovery in acute therapy drugs. JB Chemicals and Mankind are likely to outperform with an over 20 to 25% growth in the domestic market. Now, margins will be aided by niche products in the US and lower operational costs. Estimates are margins could expand by as much as over 250 basis points. Watch for higher CDMO sales Q-on-Q, pushing up earnings for Divi's as well as Laurus Labs. Margin improvement and commentary will be key for both these companies, as the street will watch for cues on big orders from MNCs and progress on opportunities such as GLP-1 drugs. Lastly, talking about commentary, watch for an update on US pricing from Aurobindo, Lupin and others, pending US FTA issues for Cipla, Sun Pharma, Biocon, and commentary on fundraising from the likes of Biocon. Let's leave you with the valuations.
Thanks a lot, Ekta, for that. Let's get the word in from Vishal Manchanda, who is joining in now. He's a pharma analyst at Systematics Group. Vishal, thanks a lot for joining in. You heard Ekta out on, what are the key expectations this time. But from your end, which are the stocks that you would be, say, most bullish on? And which are the pockets in the pharmaceutical space that you track where you see maximum traction this earnings season?
So I think Q4, my sense is it would be strongest for Zydus and Sun Pharma. So that is where we'll see most upside from a quarter-over-quarter perspective. So Zydus has got two elements that will shape their QOQ growth. One is Q4 is generally very strong for them for their consumer business, their wellness business. So that will help them on the earnings. Then second, in the US, they will have Revlimid adding on top of the numbers meaningfully. So a very meaningful addition from Revlimid, which will swing earnings favorably for them, significantly favorably for them. Likewise, for Sun Pharma, I think it will primarily be driven by generic Revlimid in the US. So we'll see contribution kicking in from Revlimid. I think for these two companies, the US business is a bit volatile over quarters, and Q4 tends for the generic business, Q4 tends to be stronger because of the Revlimid volatility in the numbers. So that's where the surprise will be. But Lupin overall will continue with the strength that they've been showing in the last few quarters.
Okay. So Zydus, Sun, and then Lupin, right? These are the three areas.
Lupin probably might not surprise, but they continue with that momentum that they...
But Zydus and Sun, you're saying, compared to what consensus is expecting, there may be upside surprises here for these names.
Correct.
Okay. Now, let me flip that question on the downside. Compared to consensus, where is the risk of downgrades?
So I think probably Divi's can probably not deliver to the extent the street is delivering. At least the annual expectations were earlier very high, which were later brought down. And I think Q4 is generally strong for them, but if they falter there, if the Q4 numbers don't turn out to be strong as they are typically are for Divi's, we can see a downward revision.
For do you track Laurus, Vishal?
Laurus is something not in my coverage, but probably they are doing a bit better in Q4 than they have been doing in the last few quarters.
Okay, there is a downgrade, I think, this morning from Goldman Sachs. But it'll be interesting to see whether some of the orders, right, where the street has been waiting for, they got the capacity, but they're waiting for orders from MNCs, etc. So we'll see if that comes through. In terms of commentary, especially on the US side, every quarter there is a bit of improvement that maybe pricing, etc. is bottoming out. Do you expect that to be reiterated? And could that kind of spark a general level of interest continuing for companies focused on the US generic market?
So I think on the pricing, a lot of re-rating has already happened in the stocks.
Okay.
So we are yet to see action on the prices. So obviously they have moderated, the erosion has moderated, but we still haven't seen prices moving up. And that is what probably the stock prices are factoring in a bit about prices starting to move favorably. So I don't think we can really predict that because it all depends on the demand supply, and supply continues to be strong. So we have manufacturing assets that continue to supply. There have been bankruptcies in the US, but all those bankruptcies have been sorted. These plants have again come back.
Got it. I just have two quick questions for you. One, do you track Entero Healthcare by any chance? I mean, there is a big move today, 20% higher. But of course, Jefferies has initiated coverage on them. Any thoughts on this one? Because it's been loss-making for 3 years. So I'm just trying to understand why the sudden euphoria on this stock.
So I track a competitor of Entero, Sasta Sundar Ventures. So they both these players are into pharmaceutical distribution. And the sentiment around the space is pharmaceutical distribution will eventually become a very large segment of the pharma. So currently, pharmaceutical distribution is unorganized in India, with 92% of the share with unorganized segment. And the expectation is it might flip. So probably over a 10 years period or a longer period, the organized segment would have the 90% share and unorganized would disappear potentially. So that's the sentiment behind pharmaceutical distribution, and they've been growing well. So they've been growing much faster than IPM and have been garnering share. So people are expecting they might turn up. So profits should improve from where they are today and keep improving every year over year.
Okay, so you said which is the other one? Sasta Sundar Ventures, right? Is the one that you track and you like?
Yes, that's at a more trading at a better valuation compared to Entro.
Yes. Okay, got it. The 309 rupees at the moment. Okay, flashing on the screen there. Thanks for that. The other space I wanted to ask you about was diagnostics. Any thoughts on this space and any stocks that you like? Metropolis just came out with their Q4 performance as well. Any thoughts there?
Sorry, I don't cover the diagnostic space. We won't be able to. Thank you.
Right. Okay. Vishal, as we go into the rest of the year with US elections, etc., do you expect, and general rhetoric rises? I mean, it's all obviously campaigning, but it does create sometimes a bit of an issue near terms for stocks. Do you expect any of that, or from a pharma side, not really this time?
I don't think generics will be impacted. There's always noise around pricing while elections are closer. Pricing of innovator drugs, pricing of generic drugs. So whatever it is, rebates. So there is always noise around all these areas. But the stocks have stopped reacting to the noise now.
Yeah, no, absolutely. We see that like clockwork, right? Before every election, and then of course things are okay post that. Vishal, we leave it there. Thank you very much for joining us and running us through your expectations for the fourth quarter. So the two names, if you're looking for earnings surprises, are Zydus and Sun Pharma on the upside, and chance of an earnings disappointment coming through as far as Divi's is concerned. Vishal, of course, also talking about a whole host of other names that he tracks in that particular space. When the Nifty is down 110 points, we're at 22,645.
Oh, absolutely. And, there's lots happening actually in the broader market. So just want to point out, Metropolis Health is now up over 4%. You have something like a Cummins, which is up 2.5%. All these on brokerage. Cummins, of course, on the brokerage report that came in earlier this morning from Macquarie, where they have a positive both on BEL and Cummins. They talk about their BEL and Cummins being their preferred picks in the industrial space. So both these stocks are doing pretty well this morning. KEI Industries is also surging, up almost about 5% right now. And then you have, by the way, even BEL is up almost about 2%. So looking pretty good over there. Since gold prices are surging, gold ETFs are also doing very well, whether it's the SBI Gold ETF, Axis, UTI, all of these gold ETFs are doing pretty well this morning too. And otherwise, it's not a bad, start to the trading day. We're down, but not out. The Nifty is down about 100 odd points, but stay tuned. We have chart busters that will take up all the market action from here.